Hello and welcome, and thank you for joining us on Business Incorporated. I'm Chimeze Obi Iwago. On the show today, Namibia's central bank forecasts deeper economic contraction in 2019. Relaunched Uganda Airlines hopes to win slice of East African travel. Plus, South Africa's National Treasury hints ailing power utility Eskom may need more bailouts by end of March. First, the markets. And general market sentiment amongst the markets we track here on the African continent was positive at intraday as all the indices tilted to the north. Here in Nigeria, the index was up 0.06%, with industrial goods services sector leading gains at the time, all thanks to Cement Company of Northern Nigeria, which was up 3.45% at that time. In South Africa, the JSE index was also up. The drinks maker Distel posted a 1.8% drop in full-year profits as currency swings in Angola and an economic crisis in Zimbabwe hurt operations. Food services firm Bidcorp also reported a 12.5% increase in full-year earnings, boosted by positive performance of its operations in Europe, United Kingdom and Australia. Egypt led gains as Lulu Group Arab Emirates supermarkets chain plans to invest $500 million in Egypt's retail sector. The EGX 30 was up 1.66% as at midday Nigerian time. And of course, the Nairobi Stock Exchange traded in the negative zone on Tuesday to finish at 0.04%. In the Middle East, Saudi stocks fell sharply at intraday as almost all the kingdom's banks dropped at the start of the second phase of introducing Saudi stocks into the MSCI Emerging Markets Index. The inclusion of Saudi stocks in the MSCI and FTSE indices has attracted billions of dollars from foreign investors who have been net buyers every month this year, sending the Saudi index up nearly 20% at its peak in May. But since then, geopolitical and trade tensions have reduced the Saudi indices year-to-date gains to 4.4%. The Saudi index declined 0.93%, with RRG Bank losing 1.3% and the country's largest lender, National Commercial Bank, decreasing 2%. In Qatar, the index was 0.04% down at 10.025 points as market heavyweight Industries Qatar shed 2%. In Abu Dhabi, the index also slid 0.4%, mainly driven by the country's biggest lender, First Abu Dhabi Bank, which lost 0.5%. Dubai bucked the trend with its index gaining 0.24%, led by 0.6% rise in Emma Properties and 0.4% increase in Emirates MBD. Overall, major Gulf markets were mostly subdued, with Saudi leading losses. In Europe, stocks traded lower in the morning after the U.S. yield curve inversion deepened to levels not seen since 2007, reigniting fears of an impending recession. Ashutosh Pandey has details. Hello, Ashutosh. Good afternoon.
Good afternoon, Chimi. Thanks for having me.
You're welcome. Now, recession fears have been weighing on global markets after the U.S. bond yield curve slipped deeper into inversion. What's the mood there in Frankfurt at the moment?
Well, it's not very different. The markets start in the negative territory, and that's after the recession fears indicated by the bond yields in the U.S. The yield curve, yes, as you mentioned, they've inverted, and especially the difference between the 10-year and the 2-year bonds, which has been like a clear indicator or the most reliable indicator of a recession in the U.S. in the past 50 years. Whichever recession has taken place in the U.S., that has been preceded by such an inversion as it was seen yesterday in the markets, and that's predominantly because of the U.S.-China trade dispute, and whatever the investors are getting wary as to whether a solution would be found or not, and also fueling their concern is the fact that till now the Chinese authorities haven't been able to confirm as to who made that call to President Trump seeking or informing him that China was willing to talk and negotiate for a possible trade deal.
And markets are anxiously following developments in Italy, where talks are on between two rival parties to form a new government. What more can you tell us?
Well, yes, the markets are anxious. The talks are on. It's the deadline. The president has given both the parties today to actually come up with an agreement and form the government. Otherwise, snap elections would be called, and that wouldn't be good as far as the markets are concerned, because at this point of time, the likely candidate who could be the next prime minister after an election, if it were to happen, then it will be Matteo Salvini, the Eurosceptic politician. And that is a concern for the markets, because he's going to take an even more confrontationist attitude towards the EU, and the deficit budget and all would be going array. There wouldn't be any, like, the markets are still to think as to how far then it could go, because he's already pledged that he'll be spending some 50 billion euros above the budget that has been sanctioned. So these are the concerns that the market has at this point of time. But there is a sense of optimism that perhaps these two parties, which have been rivals for years, the Five Star Movement and the Democratic Party, they would be able to form a government and avoid any sort of election. And that has been seen in the bond markets in Italy also, which are actually at the record, the yields there are at record lows, considering demand for Italian bonds.
And Brexit is also on investors' radar. Boris Johnson is seeking suspension of Parliament ahead of Brexit. How are the European markets following these Brexit developments in the UK?
Well, if you see the DAX behind me, that has taken a further tumble since the time it opened in the morning. That's when there was just a concern related to Italy and the recession, as being pointed by the US bond market. But now the tumble is predominantly to do with the development in the UK and the fact that the pound has also taken a beating after Prime Minister Boris Johnson's move to suspend the parliament in September. So that essentially means that he's perhaps trying to prevent the opposition from blocking his plans about Brexit, and there is more likelihood that a no-deal Brexit would be an eventuality, and that is something that the markets are bracing for. The RBC says, analysts at RBC, they've now putting a probability of 44% for a hard Brexit. And this move is also something to do with the fact that perhaps Boris Johnson is thinking that this will get the European Union to get more serious about his threats of a hard Brexit. But it's not going to be, he's not likely to have more success there, because as an economist from Berenberg Bank in Germany pointed out, that the EU is already seeing a hard Brexit as a distinct possibility, and it also understands at the same time that being bigger than the UK, it stands to lose far less than what the UK would actually.
All right, Ashutosh, this is one issue investors and, of course, the markets will continue to follow up on. So let's keep an eye on that Brexit issue. Thank you, Ashutosh, and enjoy the rest of the day. In Asia, stocks were mixed today following an overnight inversion of a closely watched U.S. Treasury yield curve to its worst level in more than a decade. Mainland Chinese stocks closed lower, with the Shanghai Composite declining 0.29% and the Shenzhen Composite shedding 0.125%. Hong Kong's Hang Seng Index was about 0.2% lower. Elsewhere, the Nikkei 225 in Japan added 0.11%, while the Topix rose fractionally to finish its trading day at 1,490 points. South Korea's Kospi closed 0.86%, with both countries remaining locked in a diplomatic spat. Japan officially removed South Korea from a list of preferred trading partners on Wednesday. In Australia, the S&P ASX 200 rose 0.45%. In the U.S., stock index futures were set to open slightly higher at around 2:40 a.m. Eastern Time. Dow futures rose 65 points, indicating a positive open of more than 43 points. Futures on the S&P and Nasdaq were both marginally higher. Well, it comes after a recession indicator in the bond market worsened on Tuesday, while fears about a protracted trade dispute between the world's two largest economies kept lead on market sentiment. In corporate news, Brown-Forman, Coty and Tiffany were among some of the companies scheduled to report earnings before the opening bell. Okta, Box & 5 below are expected to publish their latest quarterly figures after market close. There are no major economic data reports scheduled for today. And away from the equities market, and on global oil market, prices rose today with U.S. crude gaining 1% after an inventory report showed U.S. stockpiles fell more than expected, helping ease worries about economic growth due to the Sino-U.S. trade war. Brent crude was up 35 cents at $59.88 a barrel. West Texas Intermediate crude was up 55 cents at $55.48 a barrel. And in precious metals market, gold eased on today after rising over 1% in the previous session on fears of a possible recession, but held close to a more than 6-year high on hopes of a rate cut by the U.S. Central Bank and uncertainties around the Sino-U.S. trade talks. Spot gold was down 0.4% at $1,535 per ounce. On Monday, it touched $1,554, its highest in over 6 years. U.S. gold futures were down 0.4% at $1,545 an ounce. In other metals, spot silver was steady at $18.16 an ounce, having earlier touched $18,034, its highest level since April 2017. Platinum climbed 0.4% to $868.70 an ounce after touching its highest in nearly a month earlier in the session, while palladium eased 0.3% to $1,477. And here on the African continent, precious metals producer Simbai-Stillwater says it fell into the red in the first half of the year due to a 5-month strike at its South African gold operations. Gold production was hit by the strike, overpay and job cuts that ended in April and cost Simbai more than $100 million in lost revenue. The diversified miner, which is due to release its first half results on Thursday, said it expects a headline loss of 54 cents per share for the 6 months to June 30, compared with headline earnings per share of 4 cents in the year-ago period. And Kenya Airways, which is being renationalized to save it from mounting debts, saw its first half pre-tax loss more than double from a year earlier to 8.56 billion Kenyan shillings. Kenyan Parliament voted in July to renationalize the loss-making airline, which is laboring under a mountain of debt and has had 3 changes of chief executives in the past 5 years as it struggles to compete with regional rivals. The government plans to buy out minority shareholders, including Air France KLM's 7.8% stake. The carrier said its first half revenue rose 12.2% from a year earlier to 58.55 billion shillings, with Chief Financial Officer attributed to the launch of new routes and more frequent flights. And Kenya's Anti-Graft Ethics and Anti-Corruption Commission, EACC, has suspended a planned merger of Telkom Kenya and Airtel Kenya, pending a probe into misappropriation of funds at Telkom. India's Bharti Airtel had said in February its unit Airtel Networks Kenya Limited had agreed to merge with Telkom Kenya Limited, the East African nation's smallest telecom operator. Telkom was privatized in 2007 when French telecoms operator Orange bought a majority stake, which was subsequently sold to Helois in 2015. And Uganda has relaunched its national carrier, Uganda Airlines, hoping to take a slice of the East African aviation business that is dominated by Ethiopian Airlines. The country is banking on its emerging oil industry and the traditional tourism sector to generate international traffic to sustain the airline. Though air traffic in Africa is forecast to grow 6% a year, twice as quickly as mature markets over the next 2 decades, most state-owned flag carriers on the continent are losing money. And the Bank of Namibia expects the domestic economy to fall into a deeper contraction of 1.7% during 2019, down from its initial estimate of 0.3% positive growth in April. The central bank said the economy is expected to recover to positive growth of 0.8% and 1.2% in 2020 and 2021. The projected 1.7% contraction of 1.7% for 2019 represents a further deterioration from a mild contraction of 0.1% in 2018. The bank said it expected deeper contraction during 2019 would be in line with a devastating drought now afflicting Namibia, as well as anticipated contractions in major sectors such as diamond mining and wholesale and retail trade. We'll take a break, and when we return, we'll talk about Sultania Makutano Forum coming up in Democratic Republic of Congo. Do stay with us.